Okay, well, why don't we go ahead and get started? It's just after 2 o'clock and we want to respect your time. Um, Thank you for being here for today's Loudoun Habitat for Humanity Tools for Life virtual workshop. Today we're going to be talking about preparing for your first home. My name is Julie Steele. I am the programs director and the manager of homeowner services here at Loudoun Habitat for Humanity, and we're so glad to have you watching this session today. Today is October 1st when we are presenting this webinar, and this is our time where we at Loudoun Habitat for Humanity are open up for new applications of people who are interested in home ownership. But we realize not only are we seeking out people who are looking to become first-time home buyers, there are people all over the place, all throughout Loudoun County, who want to engage in that process. And regardless of what your financial situation is, if our program is a right fit for you or not, you probably have some questions about how to even get started with the process of becoming a first-time home buyer. So I'm pleased to be presenting this webinar to you today. And before we get started and I introduce our amazing presenter today, Julie Short, I wanted to just kind of share what we're going to be talking about. So today we have three major things that we're going to address. The first is, what do you have to do to financially prepare for home ownership? And then once you are prepared, then what documentation do you need to gather together to begin that process of applying for a home and preparing for finding out how much you can afford? But the last thing is to prepare for that actual loan process and know what to expect. Julie's going to take us through all of that in much more detail. Again, our topic today is preparing for your first home, and our focus is on that financial preparation. I think I mentioned earlier as Julie and I were talking that well begun is half done, and understanding the concepts we're going to be talking about today is a great place to begin. So I keep mentioning our presenter today. Julie Short is coming to us from Bank of America. She is one of the financial center lending officers. I know Julie because she's also one of our volunteers on Loudoun Habitat for Humanity's Homeowner Services Committee. And she's been a great financial mentor to many of the future homeowners that we've had the privilege of working with. I know she's got lots of great information to share with you, and just eager to answer any questions that you might have. Speaking of questions, if you do have any questions during our presentation, please go ahead and click the chat button at the bottom of your screen and type those questions in, and we'll try to answer as many as we can at the end of today's presentation. So Julie, welcome to today's webinar.
Thank you for having me.
Yeah, well, so glad you're here. I want to give us a chance to just dive right into the presentation today. So why don't you take it away?
Thank you. I will. Well, first of all, I want to say two things. Congratulations for being here. You guys are so much more prepared by taking this first step than many of the generations before you. It's really exciting, and I'm so glad that you've made the decision to be a home buyer. It's exciting. So that I also want to mention this is a highly regulated industry. And the information that we're giving you today is really for informational purposes. It's not necessarily the thoughts or opinions of Bank of America or Loudoun Habitat for Humanity. We just hope to give you a little information that makes the process go a little bit easier for you. It is sometimes overwhelming, and hopefully your loan officer is somebody that you trust and like that can help ease you through the process. Hopefully they'll go over this information with you again. I started with credit lines because most people think about credit scores when they're preparing their finances for a home loan. Credit lines is also important. What I found is that a lot of people have non-traditional credit, meaning they may have, a light bill, or they might have, your cable or your telephone, but they don't necessarily have the credit inquiries and the history that will show up on a credit report. Something to keep in mind, whether you're planning, 3 months from now or a year from now or 2 years from now, because it's not if, it's when. You want to make sure that you have at least 2 to 3 lines of credit. That can include an automobile, credit cards, a store credit card, things like that, that will show a history of your payment and that you're timely, or if there's a hiccup somewhere that you can address it. So definitely want to have 2 to 3 lines of credit. Regarding work history. Now, work history, typically the lenders are looking for 2 years of work history. And a lot of people might have the questions of, well, I got a promotion or I changed jobs a year ago. If it's a natural progression from, moving up in your work or your business, it's perfectly fine to have a job change, or if it's something that you've been working towards. Typically those things can easily be resolved with, a letter of explanation, just explaining, this is what my intention was, so on and so forth. And a lot of people are at school as well. So if you have been in full-time school, we actually take that into account as well as part of your work history. So for your down payment, I know everybody thinks about the down payment and they go, oh, how much do I have to put down, and is that the only costs? And I think we lose the overall picture of how expensive or inexpensive this process can be. You're not only going to be worrying about, having enough money for down payment, but there's also costs of the contract once it's ratified. There's closing costs. There's a need for reserves. And then you want to know what to expect with your mortgage statement. So I'm going to go over those really quickly. Basically, the cost at contract, the down payment. The down payment is a minimum, and it depends on income, area, what type of loan that you're getting, is usually 3% to 5%. Most programs have a 3% opportunity for first-time home buyers, which is great. But when you're putting that down payment, you also have to consider that you're going to have the minimum of 3%. You're going to also need an earnest money deposit, which shows at the time of contract that you're serious about making that offer. That could be anywhere from 0.5% to 1% of the cost of the home, and you'll rely on your realtor for information regarding that. But you want to have that available to write a check for an earnest money deposit. It's called an EMD, and many people will refer to it as that, earnest money deposit. Something you submit with your contract when you're making an offer on a home. So 3% down for the down payment. You also have that earnest money deposit, which will go towards the closing, the whole closing costs at the end. But then you have closing costs. The cost at contract, once you're ratified, let me go back a step. Not only will you have the earnest money deposit that you will need right away, you will also need to conduct a homeowner's inspection. A home inspection is very important for first-time home buyers, and basically it just checks everything from foundational to issues with any of the appliances, molds, anything that would challenge you. And do not fret. There is always issues with homes, even if they're brand new. So you will find things from the home inspection that may need to be resolved, and which you would negotiate the resolve, or they would agree to fix it prior to the purchase, or maybe not. But something to know in advance that how important that is. There's also a need for an appraisal. The appraisal can cost maybe $500 to $550. The home inspection can be about $350 to $550. So you want to plan for those expenses and put them in your financial plan, because the appraisal is necessary for you to know how much the home is worth based on the comparables of the neighborhood, and what the true value is. Sometimes the true value isn't always what the asking price is, but that appraisal is in there on purpose so that lenders and purchasers know exactly what they're buying, and if they're paying too much, or they're paying exactly what it is, or, you know, sometimes they even come in higher, which is great. Your closing costs always confuse me as a first-time home buyer. You know, they lump a whole bunch of things in those closing costs. It gets kind of confusing, but I always think of it as being 5 different things. Closing costs are going to include a lender origination fee. They're also going to include the title company who conducts the settlement, and they will do like a title examination, make sure that all the title is clear, that, you know, legally the home is the person's who's selling it, and if there's any hiccups that have been in the past for any title issues. They'll also be providing lender title insurance, which is a requirement for most lenders. We can get into that in another discussion, but that can be costly. And, you know, the settlement alone can cost anywhere from, you know, $550 to $750, plus some other expenses. Then you want to consider the fact that there are taxes. No matter what county or state you live in, they always have something called transfer taxes. And it's almost like sales tax. So they have to go re-register this, and it's a one-time fee. You never pay it again, but it's county and it's state. And you can always look on whatever county site to look at what the exact costs are per $1,000. There's a very, very specific equation for each county and state. So another part of closing costs are going to be prepaids, and that's basically going to be one whole entire year of home insurance that you have to purchase in advance at closing. And there's going to be interest from the day that you close until the end of the month. So let's just say, you know, it's $35 and you're closing on, you know, October 30th. Well, you only have to pay 1 day of interest, and you skip the following month. So you don't have a payment that month, but the next month you'll be paying your full mortgage. What are reserves? Reserves, it depends on the loan that you are getting, whether you need, you know, 0 reserves, you don't need anything, or if you need 2 months reserves, which is going to be 2 months of the cost of your mortgage. So they just want to see that you have a little bit of savings in there. So, you know, the banks, the lenders aren't putting you in any difficulty, and that you have the ability to pay, you know, over the next 2 months if you needed the savings, or that you have the savings somewhere. Now, on your mortgage statement, it encompasses 5 things, especially if you're not putting down 20%. If you're not putting down 20%, there's something called mortgage insurance. And mortgage insurance is completely dependent on your credit score and how much money you're putting down. You know, hopefully you can be presented some options so you can see what the differences are, but you will be paying principal and interest, as well as home insurance, property taxes, and that mortgage insurance. Not to forget also, if we are talking about Virginia, you're going to have homeowners association dues that you could be experiencing because it's a community. So they may have, you know, trash pickup, or a park that's shared within the community, and maintaining those things are usually dealt with by having a homeowners association, and those can cost, well, it just depends, but it can be, you know, $34 to $150. It just depends. So that part I am done with. That's a lot of information. I hope you understood it, and we can move on to the documents that you're going to need. The documents can be overwhelming, but if you're organized and you're thinking in advance, I mean, you'll be fine. So you do need a pre-qualification letter in order to start looking, start the process. And so your realtor will know that what you're eligible for. Your lender will tell you how much home you can purchase. For the initial documentation, you'll just need identification, front and back of a driver's license, or whatever you have. The W-2s will be needed for anybody who's employed as a W-2, hourly or salary, and the 1099s are for contractors. Now, typically you'll need 2 years of W-2s or 1099s. We also usually ask for 2 years of tax returns. It's not always the case. In many cases, if you're a W-2 employee, that's all they need. But better to plan ahead, right? Make sure you have those 2 years of taxes done. And in addition to that, we need 2 paycheck stubs typically as a lending institution. And that just says year-to-date income. They really want to see the particulars, how it's broken down. So, that'll show if, you got a raise and it's not necessarily on your W-2. So it'll also show if you have any overtime. It'll show if you have any, tips that they pull out for you, or anything else like that. It also shows some other things that, if you have, savings or something like that. So it gives the lender an idea of what your year-to-date income is, if there's any bonuses, commissions, or, sort of flexible hourly income that is not, shown necessarily in a W-2. We also need 2 months of bank statements. And your bank statements are important because the banks today really need to know where the money is coming from. They're very particular about that. They want to source everything. So keep in mind, if you're planning on buying a home, make sure you have a receipt for everything. Don't pay cash. This gets people in challenges sometimes. And, if there's an unusual transaction that may be more than half of what your typical paycheck is, they will ask for a letter of explanation of what it is. So if you have a side job or something like that that you don't have in your records, they'll just want to know what that is. Now, the second part is the documents that you'll need for the moment that you have the ratified contract to the end of the loan process. Now, that usually takes between 30 and 45 days, typically. But you'll be working around the clock for the first week, just getting these documents to your lender. So when you think it's all done at that point, au contraire, just wait. You need to make sure that you have a verification of rent. So if you are a renter and you're renting and you make payments, you will want to show a lease agreement as well as 12 months of proof that you have been paying that. If not, we can get a verification of rent through another means, but typically just have that in the back of your mind that they will ask for that in most cases. Now, if you live for free, if you live with your parents, you live with your brother, that's not a problem. Just need to notate it, excuse me. So with credit lines and payments, one thing I wanted to sort of bring up that's a caveat. If you're concerned about maybe being a co-signer for your daughter's school or student loan, or you are a co-signer for your cousin's automobile loan, don't worry, we don't necessarily have to include that as a debt per se. As long as you can show history of payment being paid by that person, you usually don't have to count it as debt against yourself. We don't. So we just need proof. But if you are in one of those experiences where, you have, the kids and you co-signed on a loan, that happens a lot. It can challenge your debt to income ratio, but there is, hope by being able to prove that. What you will experience is a lot of letters of explanation. Like if, for instance, you've had several credit inquiries in the past 90 days, they'll ask you, what were those about? Are you opening 10 loans at the same time? These are all very normal, natural questions for lenders to ask. And it's not specific to you, it's general across the board. Now, when I'm talking about hourly, salary, and bonus income, those will be looked at a little differently. Make sure you have records. Like if you have 2019 last payment, so December 2019, and you've got bonus income, hold on to it or have access to it, because it can prove bonus income where, your W-2 doesn't. So holding on to some documents is not a bad idea for 2 years. And the final one, gifts and cash and transactions, just be careful. You're welcome to get a gift for, a down payment. Some people get grants. Some people, have transactions from their wife into their bank account. And if you're the only person on the mortgage, sometimes that's still considered a gift. So just watch your transactions. Make sure you talk to your lender, make sure anything that they say to make sure you double check before you do any gifts or have any transactions that are going to be substantial. So next, work in the loan process. What to expect during the next 30 to 45 days? Well, you already know about the documentation. So that's going to keep you really busy for the first week. It takes 30 to 45 days because there's a lot going on in the back operationally. So, we're getting the appraisal done. The appraisal has to come out. The appraiser has a week to get us the report back. Then it has to go to our underwriter and make sure that it's all correct. All the documentation will be, gone through. So every transaction on your bank account for the last 2 months will be just looked at, and the documentation, whether it's signatures that are needed or missed, will be sent to you, and you'll just be required to either make a signature or change something, and you can expect that for the first week as well. Of course, the home inspection takes time, and usually you have a time frame of 10 days to get that done. The appraisal is usually 21 days. Verification of rent can usually take 2 to 3 weeks depending on the employer. Depending on who you're renting from. And the verification of employment can take 3 weeks, sometimes more, but usually there's a work number if it that we can get it, it's nice. And then if not, then we do ask for written verification of employment. And 10 days beforehand, we will check your employment as well. So whether it be a verbal verification or something like that, you can expect that we will be rechecking everything that is in the loan. And this is simply because this is a very, highly regulated industry, and that it's not specific to you, it's across the board. So if you feel like, oh my gosh, this person knows every single thing about me, they will. So go with somebody who you like, you trust, somebody who's referred to you. Financially, as a fiduciary, we keep your private information private. And the transactions, while they are extremely paper heavy, we'll hold your hand through the whole thing and walk you through it and get you to that closing table for your first home. So once you own that home, you just got to make sure you stick to budget, maintain all of the good practices that you did by your forethought in coming to this class. And if you ever have any trouble, there are places that you can reach out to for assistance before you get to that point. Thank you guys all for being here, and I hope that helps you in your journey to homeownership.
Oh my goodness, Julie, thank you so much. That was so helpful. I always enjoy hearing you talk about this, and it helps me in my job in helping other first-time home buyers. So just to kind of recap, really there were some key things that you talked about, lots of nuggets of tips and recommendations for people. But really what we want to make sure that anybody who's watching this presentation walks away with is get your finances in order, prepare for the costs. Some of those costs are going to be helping in lowering your mortgage payment, but a lot of it is upfront stuff that is a one-time kind of fee, and you just got to be prepared for those costs of homeownership. Assembling those documents that are needed at the various phases of that pre-approval and the pre-qualification phases, the documents that you need just before you go to closing, and always following your realtor and your mortgage lender through the process of through the loan process, and just take their advice and their guidance. And it's funny, as I was listening to you, Julie, I was thinking, wow, they always say in real estate it's about location, location, location. But I think in mortgage lending, what I hear you saying is about documentation, documentation, documentation. Am I right?
Absolutely. You can never be too prepared, and don't worry about giving away too much information. It will help your lender. It'll make the process easier. And it's not, like I said, it's never too early, and it's not if, it's just when.
That's great. Well, thank you so much, Julie, for your time today and for sharing your expertise. Thank you for watching our presentation today and joining us for Loudoun Habitat for Humanity's Tools for Life Learning Center workshop. We are always offering new topics on everything from home ownership to home maintenance to just being a part of an amazing community here in Loudoun County. If you are interested in participating in future sessions, we hope to see you. Please check out our upcoming schedule on loudonhabitat.org/toolsforlife. Our next session will be October 15th, where we're going to be talking about priorities for a post-COVID financial recovery and how do we move past. We're still dealing with COVID, but there are some things that we can do to financially prepare for what's next. So we hope to see you then. Thank you once again for joining us for today's Tools for Life Learning Center workshop. Thank you so much.
Bye.